In Orange County, California, something strange happened to building permits last year. Permits for regular, full-size single-family homes dropped 20%. In that exact same window, permits for tiny backyard homes jumped 40%. That's not a coincidence, and it's not just a California thing. Right now, in 2026, the market for these small backyard homes has ballooned to over $21 billion, and permit applications are surging in states from Washington to Texas. Congress has even proposed a bill to help people finance them. So what's actually going on? Why is a country that spent 70 years building bigger and bigger houses suddenly putting tiny ones in the backyard instead? I dug through the actual 2026 data, and the honest answer isn't just people want to save money. There are at least 4 completely different forces pushing this at the exact same time, and by the end of this video, you'll understand every single one of them. Plus the one financial catch that almost nobody building one of these is actually planned for yet. Before we get into it, if you like understanding the real forces behind housing trends instead of just the headline, hit subscribe right now, because that's exactly what this channel does every week. Alright, let's get into why backyards across America are suddenly filling up. Quick definition before we go further, because the terminology here trips a lot of people up. What you're seeing pop up in backyards across the country is officially called an ADU, an accessory dwelling unit. It's a smaller, fully independent second home on the same lot as a regular house, with its own kitchen, its own full bathroom, and its own bedroom. People also call these granny flats, backyard cottages, or carriage homes, and plenty of them are marketed and thought of simply as tiny homes. The concept itself isn't new. Granny flats have existed in various forms for decades in plenty of parts of the country. What's new is the scale. Over the last decade, especially starting on the West Coast in states like California, Washington, and Oregon, this idea has evolved fast and started spreading to the rest of the country. As of 2026, more than half of U.S. states now allow some form of this. Nationwide, prices for these tiny backyard homes typically run somewhere between $40,000 and $100,000 or more, depending on size and finish level. Genuinely a fraction of the cost of an entire additional house, which is a big part of why this has caught on so fast. And the scale of this shift is genuinely large now, not a niche hobby anymore. Market research firm Business Research Insights put the global ADU market at $21.5 billion in 2026, with Washington state currently leading the nation in permit growth. That's a real, fast-growing industry at this point, not just a scattering of individual homeowners doing something unusual with their backyards. Here's the first, and probably the biggest, force driving this, and it's actually a story about a prediction that turned out completely wrong. For years, housing analysts expected what they called the silver tsunami, the idea that as the huge baby boomer generation aged into retirement, they'd sell off their big suburban houses and move into smaller places, flooding the market with large family homes for younger buyers to purchase. That wave never arrived. Instead, according to a January 2026 analysis from the real estate data firm Cotality, 7% of all U.S. property transfers in a year ending August 2025 happened through inheritance rather than a traditional sale. Older homeowners are staying put in their big houses far more than expected, often because moving means giving up a low mortgage rate locked in years ago and simply passing the home down when they eventually pass away. But staying in a big house doesn't mean you don't want change. That's exactly where the backyard tiny home comes in, and it's actually solving 2 completely opposite problems depending on which generation you ask. Roughly 12,000 Americans turn 65 every single day right now, and a significant share of them are retiring this year and next. For a lot of them, the 4-bedroom suburban house made sense in 1998. It doesn't anymore. Too many stairs, too much empty space, too far from their kids and grandchildren. Instead of selling that house and buying a smaller one somewhere else, plenty are staying exactly where they are and building a smaller, easier home in the backyard instead. Sometimes for themselves and sometimes to move a parent or an adult child into. That second half is just as real. Remote work, high rents, and the same brutal cost of entry into homeownership that's been pushing younger buyers out entirely have led plenty of adult kids to move back in with family. And a backyard ADU gives everyone real, separate living space without anyone having to actually share a kitchen or a hallway. None of this could scale the way it has without a second force working in the background. a genuinely dramatic wave of policy change. California has led this most aggressively. The state passed 4 separate ADU reform bills between January 2025 and April 2026 alone, on top of years of earlier reform. Those changes have already helped legalize more than 200,000 ADUs that existed but weren't properly permitted, and they've made new approvals significantly faster. Back in 2018, California built roughly 3,000 new ADUs statewide. By 2023, that number had climbed to around 23,000, more than 7 times higher in just 5 years. And it's not just California. Colorado, Oregon, Arizona, Hawaii, and a growing list of other states have issued their own mandates specifically to encourage ADU construction. On the federal level, 2 members of Congress, 1 Democrat from California, 1 Republican from New York, introduced a bill in mid-2025 aimed at creating a government-backed loan program specifically to help homeowners finance ADU construction, arguing that Washington has been too slow to treat this as a real tool against the national housing shortage. The reasoning behind all of this reform is pretty consistent across party lines. Building a small home in an existing backyard, on land that's already zoned, with utilities already nearby, is dramatically faster and cheaper than building an entirely new subdivision from scratch, which makes it one of the few housing solutions that local governments across the political spectrum have actually agreed on. Homeowners themselves are responding to that flexibility in a couple of different ways too. Builders report strong, continued demand for fully detached backyard units, specifically because they give total privacy between the main house and whoever's living in the ADU, an aging parent, a renter, an adult child. But there's also growing interest in attached ADUs, which convert or extend part of the existing house instead, appealing to homeowners who want the extra living space without giving up much of their actual yard. The third force is simpler, and honestly the most predictable one: money. A lot of homeowners are building these specifically because they think it'll pay for itself. National survey data backs this up directly. 54% of Americans say they'd consider investing in an alternative living space specifically as a rental. 44% say they'd specifically consider putting an ADU on their property to generate rental income. And among people who already own one of these alternative living spaces, 41% are actively renting it out right now, while 56% are using it as their own primary residence. The financing side of this is also finally starting to catch up, which matters a lot. One ADU-focused lender, a company called Samara, has started offering full financing for ADU builds to homeowners who have enough equity in their primary home. And its CEO has drawn a direct comparison to how rooftop solar financing evolved. Solar was hard to finance until lenders figured out how to reliably predict the income and savings it generated. Once that became documentable, the loans followed. He's betting ADUs are following the exact same arc, and there's early evidence backing that up. Fannie Mae and Freddie Mac have recently started allowing ADU rental income to actually count toward a homeowner's primary mortgage application, which is a meaningful shift in how these units get treated financially. Now here's the part worth being genuinely careful about, because building one of these isn't the free when the surveys and headlines make it sound like. First, financing remains the single biggest barrier for a lot of homeowners, even with the recent improvements. Conventional construction loans generally require you to already have significant equity in your primary home. And while some regional credit unions now offer ADU-specific loan products, middle-income homeowners without much home equity still genuinely struggle to access the capital needed to build one in the first place. That gap is exactly why the federal loan program was proposed, but as of now, it's still a bill, not a program you can actually apply for. Second, property taxes go up, and the number can be bigger than people expect. In Seattle, for example, a typical $300,000 ADU build triggers roughly $2,800 a year in additional property tax under King County's current rate. That's a real, permanent increase to your annual costs, on top of whatever the ADU itself costs to build, and it's easy to forget about when you're only doing the math on the upfront construction price. And third, this is the one industry insiders are actually worried about: quality control. As demand has exploded, the ADU industry has also gotten flooded with inexperienced builders, weak trailer and foundation systems, and marketing companies that present themselves as manufacturers without the actual engineering experience to back it up. Once you're talking about a permanent code-compliant structure that someone might actually live in long-term, or rent out to a stranger, the stakes are considerably higher than a Pinterest-worthy backyard studio. And the companies genuinely built to last in this space are the ones investing in real engineering and code knowledge, not just fast, cheap construction riding the wave of demand. So, why are Americans suddenly building tiny homes in their backyards? It's honestly not one reason. It's older homeowners staying put and building smaller instead of moving. It's younger adults and their parents solving a housing crunch by sharing a lot instead of a roof. It's a genuinely unprecedented wave of state and local policy reform, making it dramatically easier and faster than building a whole new house. And it's a real, growing belief that a backyard ADU is a legitimately smart financial move, backed by lenders who are finally starting to figure out how to underwrite them properly. All four of those forces are real, and they're happening at the same time, which is exactly why the growth numbers look as dramatic as they do. But the honest version of this story includes the property tax bill, the financing gap that still exists for a lot of middle-income homeowners, and a genuine buyer beware moment happening in an industry that's growing faster than its own quality standards in some corners. If you want to see what it actually costs, start to finish, to build one of these in your own backyard in 2026, that's exactly what we're covering next. So stay subscribed and keep your notifications on. Thanks so much for sticking with this one all the way through. Drop a comment and tell me honestly, if you had the space, would you build one of these in your backyard? And would you live in it or rent it out? See you in the next one.